When it comes to vacation ownership, there's only one name that comes to mind: Mahindra Holidays under the $17.8 billion Mahindra Group. Over the last decade, the company has established itself as a market leader in the vacation ownership space. To talk a little bit more about the growth plans, the boom in the tourism industry, as well as the outlook for the company, joining me right now is Mr. Kavinder Singh, who's the Managing Director and CEO of the company at the iconic Mahindra Towers. Thank you so much for being with us today. And really, I have to say, the association definitely does come to mind. What a lovely business model you have as well for the company, where the capex and opex is funded by the members. Tell us about your journey since 1998 when you were listed.
Actually, we started our operations in 1996. We got listed in 2009. We complete 20 years this year. In fact, what a way to complete 20 years. We have been voted as the India's favorite resort chain. And this is amongst 12 million travelers. And we are extremely proud and happy. Talking about our journey over the 20 years, I think one thing which we are very proud of, today Indian families regularly take vacations.
Yes.
In fact, we believe we created the culture of regular holidaying. So we feel that this is something that we can be genuinely proud of. In terms of the paths that we took during our journey, our objective was to create extremely beautiful marquee resorts over the years. And for a member who joined, what was the deal? The deal was that the member comes in and he signs up and he gets affordable for 25 years family vacations every year, 7 nights, 8 days every year. And not only that, to suit their family size, they could start with a studio apartment, they could take a 1-bedroom apartment, and they could go to 2-bedroom apartment. And in terms of seasons, if you wanted to holiday in the peak season, we have something called purple. Or if you wanted to holiday in off-peak season, we have something called blue. So we made it very simple for families to take vacations. And in the process, over the 20 years, created 49 marquee resorts and accumulated 218,000 members. Wow. And this is something that we are very proud of. And in this journey, I must say that our positioning as the #1 family holiday provider is truly unchallenged, and we feel that we are on our way to becoming the world's #1 in time to come.
I'm going to talk about that. Very impressive. And just let's talk about the industry as a whole as well. People's spending habits have changed, the rising income level, the aspirations have changed. How do you see this market growing, vacation ownership? Do you think it's going to grow multifold from here?
So the way we look at the market, we believe leaders shape the market, and we believe that we are helping build the market by doing few things. Number one, when we take a member in, the member has to be given service for 25 years. And most of our members are happy members, and therefore we get huge amount of referrals. Sure. So our entire growth is coming through the referrals, and today we are finding even digital as a channel is contributing to our growth. Now, coming back to the Indian demographics, I think demographics in India are more favorable than ever before.
Yes.
If you look at it, 2/3 of our population is less than 35 years, and disposable income's growing. Now, let me talk about the potential. That's a question that you asked. We believe that while India is a big nation, but for our product, people who are earning, households who are earning more than 3 million rupees are our target customers. And we believe there are at least 4 to 5 million households which are earning that kind of income. And this class is growing. And talking about penetration, we are just about 5 to 7% penetrated in India. If I were to look at US vacation ownership business, US vacation ownership business is about a $9 billion business. Yeah. In this $9 billion business, they are just about 5% of their hospitality business. In India, we are less than 1% of our hospitality business. So I believe there clearly is a 5x potential for our business. If we are today at 218,000, our dream is to have 1 million members in time to come.
So that's what I want to touch upon. Very impressive. And in the last quarter itself, about 6,177 members is what you added. I think that was the highest in the last 5 quarters. take us through your outlook on membership addition. I know you spoke about numbers, but over the next 1, 3, and 5 years, what are the targets?
Okay. So the way we look at it is, we are saying that, look, we are in the business of creating unique experiences. Now, when I say resorts, every one of our resorts is in a different terrain. So some are in beaches, some are in the hills, some are in the backwaters, some are in the wildlife area.
Yeah.
So our aim is not just to grow our membership for the sake of growing membership. Can we create variety of experiences for our members, both in the resorts, and now we are thinking of creating the experiences in the cities. In fact, last year we invested in a company called Gift Zozo. Now it is renamed as Zozo Day. They aggregate city-based experiences. For example, if you have a sister in Delhi and you want to wish her a candlelight dinner, a BMW could come and pick her up and she could have a candlelight dinner with her husband, and you're all paid for. So these boys were creating this business, and we found this business quite interesting, and we are now using their skills to create experiences for our members in our resorts. We have themed dining, we have beachside dinners. So we are realizing that the aim should be to create variety of experiences, not just become an accommodation provider. And in this journey, whatever is the number that we are able to add becomes an outcome and not necessarily our goal. So we believe that if we focus on creating unique experiences, immersive experiences for the families, the growth is bound to happen. By the way, our referrals and digital contribute to more than 50% of our sales, which shows the pull for the brand that we are experiencing. And just to give you another number, since we are investing in creating inventory of about 600 units over the next 2 to 3 years at an investment of 600 crores, we believe that this itself is enough of a surrogate to see the kind of growth that we are likely to experience in the coming years.
Okay, and you've also given your members the option to holiday in Europe with the acquisition of holiday resorts. Now, initially it was a loss-making business, but analysts are seeing a lot of potential here over the next 2 to 3 years as well. That will aid your profitability as well. So what is the outlook for holiday resorts?
So Holiday Resorts is one of the most respected vacation ownership company based out of Finland. They have 22 resorts in Finland, about 6 in Gran Canaria, Spain, and 2 in Sweden. Now our members have access to these 31 resorts as well. So when you add 31 to 49, it becomes 80. It's amazing that a member who's signed us up, say 5 years ago, and we had, let's say, around 25 resorts, today can holiday in 80 resorts. So in some manner, the members obviously have a great deal and they can look forward to holidaying in these resorts. But coming back to the potential of the company, I think we saw a great potential in this company because it's very rare in a vacation ownership business to find companies which are run with ethics and build trust over a long period of time. As you know, Mahindra's, we have a legacy of creating this business based on trust.
Yes.
So we didn't want to sign up for any company which was not, in terms of building trust, is found wanting. And we find that from the time we have come in some manner we are seeing a turnaround. In fact, in this year, as we speak, on a turnover of about 1188 crores, they had about 6.5% EBIT margin, which is fantastic because they were earlier having losses and now they have turned around. So we look forward to being a partner of Holiday Club. And why do I use the word partner? While we have completely acquired them 95%, we allow them to run independently. They have a separate management team, a separate board. We don't interfere in their day-to-day operations, and that's what is actually helping us to grow them in the markets that they are.
And speaking of that, with the acquisition, this makes you one of the largest timeshare owners outside of the United States. Very commendable. So is there anything else that's on the anvil? Are you going to be on the outlook for any other acquisitions overseas or anywhere here as well?
In our business, one of the core things is to create experiences in destinations. So creating destination variety becomes a key imperative. Now, by creating an opportunity for our members to holiday in Nordic countries, Spain, and of course Sweden, we are now realizing that we need to be present probably in more numbers in Southeast Asia. We have presence in Bangkok and Kuala Lumpur, but we believe there are opportunities in other countries. And we also believe Western Europe is an opportunity for us.
Yes.
And last but not the least, US. We certainly believe that in these three big regions where tourism boom is happening, we should be present. So we are constantly on the lookout for resorts.
So anything in the next 1 year?
So we normally do not fix a timeline to do an acquisition, but what we think about is that if there is a good target that we get, like we got in Holiday Club, we would certainly look at, we could look at an individual resort or we could look at a resort company.
Okay.
Yeah.
All right. Let's get down to the financials as well. Very good growth what we saw in FY17 despite the fact that there was demonetization. And with analysts saying that now Holiday Resort could add to synergies going forward, what kind of profit and revenue growth can we see for FY18?
Okay, so I think demonetization, I just want to spend maybe a few seconds on demonetization. Demonetization in our mind is equal to digitization, right?
Yeah.
So digitization helps us to get members who are pre-qualified because most of the members who are now signing up have credit cards. So we are finding that we are able to get higher quality customer. We did a lot of innovation during the demonetization period. We struck new alliances with various brands whose customers are also interested in travel. So we were able to acquire high quality customers.
Yeah.
In fact, demonetization turned out to be an opportunity. Coming back to what we are looking ahead, I think as we speak, we have a significant amount of inventory addition planned out in the coming year, both through the leasing route as well as through our own projects which are on. And two of the projects are moving at a fairly brisk pace. And we believe that if we have inventory brought out in time,
Yes.
our ability to acquire members will only grow. If you look at our track record, and I don't want to say whether we will maintain the track record, in 15-16 we grew by 26%. This year we grew by about 14.5%. And I think the brand has the right pull and it's seen as aspirational. In fact, leisure is becoming aspirational. We are finding that people want to go out and break from their day-to-day routines.
Right.
But not only that, they want experiences. They just don't want to simply go and relax. They want new experiences.
So we can see a 10 to 15% run rate going forward?
So we normally do not speculate on what we would end up doing.
Yeah.
I mean, if you look at the way we are building our resorts, if you look at the way we are looking at inventory, we are reasonably optimistic about how we think the company would grow.
Okay. Even when it comes to, 600, I think that's your golden number. You're targeting that kind of a capex over the next 2 years, adding, 600 own rooms as well. On those two fronts, can you give us more details on what the capex will be used for?
Okay. So one good thing I want to share with you is that in a typical hospitality industry, the key challenges are debt
Yes.
and occupancy.
Yes.
And since you track hospitality, we do not have an occupancy challenge. We have 85% occupancy. We have zero debt. So we believe that this 600 crores that we are spending, and we will add up more depending on how we see the outlook. We believe that this will create two kinds of marquee destinations or resorts. One, in popular destinations like Goa and Kerala, where we have in Kerala, we have an existing resort in Ashtamudi. It's one of the most picturesque resorts where we have floating cottages. And we are adding inventory there in Ashtamudi. So this is a pre-sold resort. It always runs at a 90-95% occupancy. Coming back to the Goa, we believe that Goa remains a very popular destination, year-round destination. So we are building a 240-room resort in Goa, which is likely to become operational in the coming year, 2018-19, if everything goes as per the plan. We have an amazingly new resort, which is coming up in Naldera, which is a 115-room resort. This is just ahead of Shimla. And then we have another place in Kandaghat, again near Shimla, where we have an existing resort where we are building. So this entire capex is actually towards creating amazing destinations and resorts. Of course, we allocate some of the capex for renovating our resort. That is a routine activity that will keep going on.
Okay, and you spoke of occupancy, 86% growth is what you've seen. Your resort income has been strong. How do you see your occupancies growing going forward, and how much allocation do you see for resort income, and how will it grow?
All right. So one thing, talking about our incomes, I think as you alluded to that in your first question about our business model.
Yes.
A few years ago, we used to have 70% of our income coming through the vacation ownership fee and 30% through the other streams. Now we have 50-50. 50% comes from the vacation ownership income and 50% is through the other streams. And let me tell you the other streams. We have resort income that you alluded to. We have annual subscription fee income, and we have income because people buy on EMI, so we have interest income. And we also have an annuity income because in our accounting system, 60% of the income is recognized upfront and 40% income comes over 25 years. So that's another annuity income. By the way, we also upgrade our members from blue season to white to red to purple, and that adds to another source of income for us. So our income streams are multiple, and some of them are in the nature of annuity, which actually prevents us from getting into a shock just in case there is a lower member addition in a particular quarter. So that is in some manner the strength of the business model that we have, which has stood the test of time over the last 20 years.
And going on as well to talk about some of your other digital initiatives, which you said contributes about 50 to 55% of the sales, but the contribution has been good, but the spends are quite a bit over there. So what is the outlook in terms of ad spends and how digital will shape up?
Okay, I think on digital, one thing we have to learn is that while digital is a great engagement tool, it costs money because you need to be able to target the right customer, and it doesn't happen so easily because you need to learn along the way. And I must say we have been learning along the way, and in the process we have incurred costs which are higher than what we would have ideally liked to. But as time goes by, we believe we will understand digital better. Digital and referrals put together contribute to about 50-55% of our sales, which shows the pull of the brand. Referrals come much lower in cost. So if you look at digital and referral cost, it comes down much lower. Talking about advertising spends, I think the way we are looking at advertising is we are not a mass brand. So for us, one campaign which we came out with only at, I think was an amazing campaign. It got 10 million views on digital. It was there. It garnered the right number of GRPs across various channels. So for us, it's important that we are present in 360-degree ways, both in our resorts, amongst our members, on TV, on digital. So we will keep spending money to create awareness and creating the necessary pull for the brand. And in terms of spends, I think in terms of our advertising spends, they are not very high as people think. I think 4 to 5% of our turnover goes in building the above the line, but we do a huge amount of work on the ground in acquisition marketing, which is below the line. And that is where really monies do get spent. And we believe there is an opportunity to probably improve on those areas of spends through getting better quality alliances that I was talking about.
Analysts also foresee certain risk in terms of getting in new members, cancellation of members as well, some of the stringent accounting policies. These are, of course, certain risks. How do you plan to alleviate it?
Yeah, I mean, in any business, there would be risks. And I think if analysts see that if we are, for some reason, not able to cope up with the member additions. Now, whenever we release our member addition numbers, they are net of the cancellations. So really, analysts are now have realized that we are reporting like-to-like numbers. We are not reporting numbers and then saying there are cancellations after that. And let me talk about cancellations. And, you know, people buy us and they find that their needs have changed. They don't holiday in India anymore. I mean, we have options, therefore we are looking at increasing our overseas footprint. So there are times when they say that, look, I have moved into a different location and I would like to opt out. So these are life stage issues. So we are doing life stage segmentation. In fact, one of the learnings that we have had through the life stage segmentation is that over 55, there are a lot of members who would like to take shorter tenure holidays. So we launched a product called Bliss, which is an extremely successful product, and we are finding people are taking it up. It's a points-based system. You can actually burn your points to go on even a cruise. So we are trying to create that kind of a situation. So in terms of risk mitigation, create newer products, Bliss, so that you ensure that your net member additions, if they are slowing down in the 25-year product, there is a 10-year product which takes over. That's one clear risk mitigation strategy. Reporting numbers net so that there is no confusion on the cancellations. And looking at newer segments so that people, for whatever reason at various life stages who are wanting to move out, bring them in through the newer products. And coming back to the accounting policy, I think the accounting policy is as per the Indian accounting standards, which says that, look, you are acquiring members, there is an income that you're reporting, there is a cost of acquisition, and you can report income in line with the costs. So we actually, and this has been going on for years now, 60% of our income is recorded in the first year, and 40% of the income, because we discharge our liability over 25 years, is recorded every year, which becomes a significant source of annuity income for us.
Okay. And moving forward, we have also seen the promoters have been selling a bit of stake. Are there plans to sell more? Would you like to comment?
So the decision to sell stake is M&M's board. We are a separately listed company, though we are a subsidiary of M&M. Mahindra Holidays cannot comment on why M&M would like to pare down the stake, and that's a decision the board of M&M takes. And we in our board, Mahindra Holidays, which is an independent board, are focused around building our business, like I mentioned. So we really wouldn't want to comment on what their decisions could be in the future.
How does the company plan to capitalize on the domestic tourism boost, on the rising resort income levels?
So the rising resort income levels, I think that's a very interesting question that you raised. You know what happens when we have 218,000 members, when they come and holiday? There is a significant amount of income that we get through the F&B, food and beverage, holiday activities, and of course, various sightseeing trips that we organize for our members. So we find that that income is rising, and this was something that was expected, but now it's playing out. So as we add members, we believe our resort incomes will rise, and which is the point that I was making to you earlier, that this resort income is a part of that 50% income. The number that used to be at 30 now has become 50, which has this resort income included. So resort income is something that we are excited about, that it will grow. Our annual subscription fee income is another regular source of income that will happen. So in some manner, these are mitigating incomes. So just in case for some reason we have lower net member addition, the resort income is there for us to sort of ride over the quarter, just in case.
And finally, vision for the company. You plan to be one of the top 5 vacation ownership companies by 2020, if I'm not wrong. How do you plan to stick to that vision? Are you on target?
So we want to be amongst the top 5 vacation ownership companies in the world. We are already, if you leave North America, we are the #1 vacation ownership company in the world, leaving North America in terms of number of members. I think the vision that we have set for ourselves of being in the top 5 2020 is achievable. We might achieve 1 year earlier. This is what we believe.
Yeah.
But more important than actually achieving the vision is, while we are driving our member additions, we also want to be known as the most admired vacation ownership company in the world. We believe that we are a true Indian multinational. Indians, wherever Indians go, we will be there, probably ahead of them. And we will take India to the world. And we believe that in this journey, we want to be not only be known for creating a very big or a large organization, but can we be the most admired vacation ownership company in the world? So that is the true dream that we have. And we believe that we are well on our way in terms of moving in that direction.
I have no doubt of that. And finally, tell us, Mr. Singh, which is your favorite resort?
Okay, I have, as I mentioned to you, that we have resorts in hills, beaches, backwaters, forts, heritage, wildlife. My personal favorite, and I don't want to single out because my guys are going to, kill me saying that you
like
are
a bad
yeah,
dad.
yeah. So I love all of them. Of course, I must say that I have not been able to visit all of them.
Okay.
It takes time.
Yes.
So the one which I like the most, very recently in my recent travels, and it can change, is Kanatal. It's an amazing resort ahead of Mussoorie, and the one which I really enjoy when I go to a beach is Varka, Goa Varka.
Yes.
This is another amazing resort.
Can't wait to visit.
You must. And the other, and you can actually walk to the beach, so that's the best part of that resort. We have some amazing resorts in Kerala.
Okay.
And the one which is my favorite is Munnar. Munnar is another favorite. We actually created the destination. And I must not forget that when I visited Kumbhalgarh, it's another amazing resort which we created, and we actually opened the destination for the Indian travelers.
Difficult to choose from your babies. It's
That's
like
right.
That. Well, thank you so much, Mr. Singh, for joining us.
Thank
and
you,
all the
Avan.
very best for the vision for Mahindra Holidays.
Thank you very much.
Thank you.